Okay, are we live? All right. How's it going, dear?
It's going good. It's going good. How about you?
I am living the dream. I'm so excited for today's topics. I was looking
All right.
over the plan, and we have a lot of fun today.
Okay. So hello everyone, and welcome to today's session that we are having with Mr. Phil Cutting, who is the visionary founder of Land Product. I'm Rahima Wasti, who is going to host this exciting event for today. Today we have the privilege of diving into the world of app development, funding strategies, and career navigation with the visionary founder of Line Product. That is again Mr. Philip Cutting. Phil, it's fantastic to have you here. How are you and how's your day going?
I'm doing amazing. I'm so excited for today's call. Based off the description of it, we should be able to wrap this up in a short 4 hours.
Yeah, sure. Let's kick things off with the bang, shall we? Our audience is eager to learn more about funding and monetization strategies for app development. What are your top recommendations in this rapidly evolving landscape?
Okay, great. So when it comes to funding applications, application development, there's several avenues to explore. Now, initially, I want to start off with having my stakeholders bootstrap it, meaning they bring in their own cash, get it going as far as they can. The
Mhm.
I find what works really well is to at least get through discovery and the design stage before you start looking around and asking for money. And in that discovery and design stage, it's great if you can verify a little bit of your product and get to the point where you're comfortable to asking friends and family for money. And then from there, kind of work your way up the value chain of raising funds. So bootstrapping, get it going as far as you can personally, show everybody that you got some skin in the game, do enough research where you can you're comfortable to convince friends and family to come in and to invest with you. Doing so shows investors and angel investors, or you name it, that you're serious about it, or at least you're at least convinced enough to ask your family for money. So sometimes I know some investors just won't get involved if you haven't either raised a significant amount of money yourself, showing you're serious, or if you're brave enough to ask friends and family before you go out and ask the rest of the world. A lot of them will take that as a red flag if you don't kind of start it yourself and get some participation going for your local inner circles.
Yes, that's some great advice, Philip. Now let's talk monetization. With the app market becoming increasingly competitive, what strategies do you recommend for maximizing revenue?
Oh, awesome. So it depends on your product line, right? Now there's a
Mhm.
range from freemium all the way through subscriptions to pay upfront, lifetime models. It depends on the cost of maintaining your service and the industry that you're in. So right now, uh, well, back in the day, it used to be, we had games, for example, and it was all console based. You pay 40 or $100 for the game, and you own the game, right? Nowadays, it's the
Mhm.
opposite. We pay in subscriptions. We have freemium models. Then they get wrap us up to subscriptions and buying in add-ons, right? So that's where the gaming industry has gone. So it's very industry specific, and unless you're
Mhm.
able to create some blue ocean strategies, you're going to have to take a look at what's happening in the marketplace and compete with that, because those quickly become norms for users. Now, if you're innovative blue ocean strategist, right, there's a lot more you can do, and then also you have better potentials. But it's hard to develop a blue ocean strategy.
And that's true. Phil, now pitching to investors can be nerve-wracking for many developers. What tips do you have that you can offer for creating a compelling pitch that stands out from the crowd?
Okay, terrific. It starts with having your business model that's clear, your product value proposition that is clear, that you've done a little bit of market research to show that there's demand, maybe even gotten some product out there and some real use. and you already have your MVP, right? So it all depends on where you need to bring in funding. The sooner you have to bring it in, the more clearly you have to define your path forward and verify things. The less and if you're well endowed as far as economics go, you can create a solid community, and then you can get way better terms based off of showing the vector that you're on, and that you have retention and showing what you're going to use the money for. You always have to explain to an investor why you're going to use their money and what the next inflection point is. Some of the biggest mistakes in raising money, first of all, come from either asking for too little, asking for too much, or not knowing how to use that money properly in the first place.
That's some real advice here. Now let's delve into crowdfunding. Are there any advantages to this approach? And if so, what are they? What would you recommend?
Okay, great question. Crowdfunding is becoming both crowdfunding in debt form and crowdfunding as equity has really stepped up since 2021, where the VC capital market really cut back pretty far based off of COVID and the economy, and they've still been largely frightened to get involved too much. So, but there's still a lot of money out there, right? And there's a lot of people with a little bit of money that's excited to get involved in businesses and make better returns than they can otherwise. Now, there's challenges with that. There's relationships you have to create. But right now, I'm a big fan of equity crowdfunding and debt crowdfunding. They both have their place. And I think a smart way to do it is to try to start with equity, with debt, knowing that it may roll over into equity. Plan that in. There are debt instruments that start off as debt financing and convert into equity, depending on if you're able to raise the money by then or if you're able to buy out the notes, the investment. So right now, I'm a big fan of it, and it still comes, even within those two categories, it comes in a lot of flavors, which we can probably dive into more because I think I ran too long on this one.
All right. That was fascinating insights, Phil. So let's delve into our next question. That is, what's the rise of funding models emerging for app development in the near future? What would you want to have?
Okay, cool. So with the rise of e-funding policies and applications, what we have is the technologies that allow us to track our activities in a healthy way. Right now, we all know that the IRS wants to track every $20 that we spend. That's not what I'm talking about, right? I want to be able to track my product or service as it evolves with a customer, or as money flows and services flow between people along the value chain, the whole value chain. Now, that value chain may be my internal product value chain, right? Or it may be the value chain of a dollar or a cryptocurrency, right? So I like using blockchain technologies for this purpose, to build that value chain and the understanding of progress, more so than I like blockchains and those and wallets as a funding source. And because we're going to run into some regulatory problems in our cryptocurrencies in the not too far future.
Absolutely, yeah. So from here, we're gonna get on to our next question. That is, could you share your thoughts on potential impact of artificial intelligence on app development and funding in the coming years?
So artificial intelligence is going to allow us to move very fast.
Yes.
It's also going to make it so that it's easier for us to make mistakes as we're moving, because we don't have this downtime to think through the edge cases. We're going to kind of compensate that by relying on technologies to help us brainstorm those edge cases and maybe verify them. But I think we're going to find that we are about to go into a session in the world where we're going to have very rapid technological and cultural changes and growth, and it's going to become very exciting. So I think it's going to be really beneficial as long as we understand that we have to be able to respond very quickly, because we're able to make mistakes very quickly, as well as we're able to be successful very quickly.
Mm-hmm. Yes, that is what most of us do. How do you suggest leveraging social media platforms effectively to boost crowdfunding campaigns for app development?
Yeah, so I think you have to. When it comes to crowdfunding, it's really influencer marketing. Right now,
Right.
you don't want to be the guy that in the cave developer, and he's raising money, and because he just knows he's really good, right? He's amazing,
Yes.
and people will appreciate him just by putting out the few details that he needs to out there, and the minimum work, and he can focus on his core soul, whatever makes him happy, right? This guy is going to have two problems. First of all, he's not going to raise all the money he wants. And second, he's not going to get the terms that he wants, because he's probably going to get more sophisticated investors. That's great, right? Being that maybe he is going to get people that understand how to work with money better and recognize value. It's bad in that he may get more sharky people and not have as much opportunity to cherry pick the terms and get better terms. Right. So on the opposite side of that is where I want you guys to be, is developing your social network, making your branding, and creating the presence that people know who you are. You answer questions, you're holding events, you're proactively getting out information, and you're answering people's objections ahead of time. And when you get good objections, you handle them in real time in a meaningful way that shows you're quick, you're thoughtful of this, you have a process to handle those, you're not scared of them, right? This is what the being open and social allows us to do as investors and app developers, which is to go out there and present the best side of ourselves, and even allow us to fumble and to recover and do so gracefully. So I'm really excited for integrating social components. I think you should plan to. When you're doing crowdfunding, it's not a quick thing. You got to think like 2 months of work to get out there, to do podcasts, to do YouTube videos, create your channel. And I think create for your company its own brand, its own identity. Right now, everybody that is an investor, they should have a personal branding that you should know what they are, right? But you want to have all those resources for this project, for this company, in its own little haven, in its own YouTube channel, in its own social presence, so that that's an asset of the company. And this also helps investors be more confident, because it raises the value and it helps create the system around it.
Right, remarkable words. Philip, what are your thoughts on viability of decentralized finance platforms for funding app projects, especially in the light of recent trends?
Okay, yeah, very interesting. So DeFi is a technology where it's essentially combining crowdfunding with cryptocurrencies, and
Right.
I think it really has its place, especially for technology. I'd be a little more concerned about it in the world of physical products, because when you have inventory and you have a high currency, what is it? Volatility, right? You can really lose money and get hurt, right? So, but if you have a product that it costs almost as much to sell a lot as it does a little bit of it, then you can handle that, and you want to bring in more sources of income, and then you can play with that, right? So it's unlikely that you'll get as hurt or whatnot. But risk, with every risk there comes potential reward. So the greater the risk, the greater reward. And that's kind of how I feel about DeFi as a platform for financing. If it's a company that if you're the investor, right, and you're looking at it, you're like, hey, I got a bunch of cryptocurrency, I want to invest it, right? These are the kind of companies I like to look for. And I'm thinking more tech, intellectual property kind of concepts, right? You can invest in the intellectual property companies that work with manufacturing and physical products, but you're still investing in that IP, and that IP is what's scaling, right? Not the production of those products, right? I wouldn't want to use DeFi to open up McDonald's or Tesla plants, right? Even though Elon Musk probably make fun of me for being so stupid, that's kind of like where I stand on it, right? I kind of see that he also didn't stay in cryptocurrencies very long, so I like it. I like crowdfunding, and I also like both of these technologies or concepts to get you started, right? So, like I said, bootstrap, fans and family, and now you can looking at with DeFi maybe get you to the 50 to 150,000 funding with crowdfunding, Kickstarter, and so on, from 100 to 300,000. Right, those are some great play. I mean, Kickstarter, you can start even just to write a book, right? But it's you do way better, in my personal opinion, if you try to get to like 10, 20, 50,000 on your own before you start looking at these platforms. Now, if you really want to use these platforms just to verify your idea, that's a great way to do it. But keep that limited, right? Don't try to raise $1 million through these guys to verify your concept. If you're using them to verify, just get the MVP out there and release that concept. All you want to do is just enough to see that there's interest out in general interest, right? If that's where you're starting.
Right.
So interesting conversation on that.
All right. Well, great advice you got us over there, Philip. In your experience, how important is it for app developers to build a strong brand presence to attract investors and users alike?
I think if you're passionate about what you're doing, it should show, and you shouldn't be shy. Now, you don't have you can look like me and say, "There's no way in hell I'm going to go on radio, right, or TV." I got a face for radio, so it's okay if you don't show your face if you really don't want to. But the best is to get out there, show your face, even if you're as ugly as I am, and to let people see you who you are, see your passion, see your expressions, and see that you really get behind what you're building. It's the same thing as when I was saying, hey, investors like to see that you put in some bootstrap funding and that you have asked money from friends and family before you come out to them, right? If you're not brave enough to show your face and put your reputation on the line, why should they put their money out there? And everybody understands this intrinsically, right? A lot of people are scared to. If you are scared to, or you just don't want to do it, find a partner that will get out there and be that brand presence for you. Maybe an influencer that's really passionate with you to partner with you on something. Influencers are hard when it comes to that, so don't think it's like super easy to get them to do that. But don't be afraid of asking if you don't want to show yourself. If you can't show your personal brand, just get out there and become that influencer and be that avatar and advocate for your company.
And that helps. It definitely does. Philip, with the growing concern around data privacy, how do you recommend app developers address these concerns while still monetizing their products effectively?
Awesome. Good question. So let's take a few levels of this. The first level is that you build an app that protects people's privacies. If you don't want to have that app that's leaking people's or children's information or credit or any kind of sensitive photos or anything like that. You don't want to be that guy, right? So assume let's just assume you're doing good architecture and you're monitoring logs and you're doing you're not doing a server out of your bathroom, right? Use solid systems, right? Now, as far as protecting the privacy of yourself, right? You should do this, right? This is a concern that we all have when we go out there. I like using entities, LLCs or corporations to protect or trust to protect my personal information and to protect my personal assets and separate my business activities from my personal activities. It's also good business practice at this stage. And as far as privacy and safety for for investing, we go back to some of the concepts we just talked about earlier with DeFi investing, right? DeFi became a thing because people couldn't get money from banks just because of something that like just, it was their banks, right? It's the cheapest source of funding. People go there first, and then they have to have something else to follow on to. So DeFi and crowdfunding became a thing. And if you're looking to protect yourselves, you got to be considerate of the way you go. If you have physical products, crowdfunding with real cash is probably a great idea. If you have digital products or low cost of scaling, then DeFi or crowdfunding, you can go either way. But a lot of people have a lot of cryptocurrency that they like to see investing grow, and it's a great way for them to do that. So DeFi is a powerful option there and safe. And safe, right? Investing is never safe, but it's easier to scale. Now we got to understand, business is hard. 1 out of 10, maybe more, don't do well, right? I mean, only 1 out of 10 perform. 9 out of 10 are not going to invest and make a profit, and you're going to lose all that money. A lot of it, there's a lot of factors involved, and coming from not following the kind of recommendations I make by doing good discovery and making sure you validate the usefulness of your product and the market segments, all the way through, just COVID hits when you're just about to launch and everybody's locked inside, right? So those are some of my initial thoughts on it. And I think at a higher level, you want to look at your physical safety and security, where you're making sure, obviously you're a healthy person. You're taking care of your transportation. You're not abusing drugs, and you're representing your brand in a meaningful way that's going to help support the lifestyle of the investors that you're doing with, right? So I think it's, health and prosperity a lot of times go together. And yeah, I hope I answered that question.
Awesome. That's good. Philip, as a marketing expert, what strategies do you suggest for app developers to increase user engagement and retention, ultimately leading to higher monetization potential?
Okay, great. So I want to, the first thing you have to do is draw attention to your product. So when you're building your product, you can build it out in the open, right? You can invite people to see what you're building. You can start, like, built with community is a fun thing right now to do, right? You start with your minimum product. You invite the community, say, hey, who did this super well? Mid-Journey, right? From early on, they had a product, they were training it, the whole community could come in, they're there on Discord and building it with them, and people were involved early on, right? They weren't worried that somebody's going to take their concepts. They just got it out there and built that community. Yeah, a lot of other competitors came on, but they really stayed with the community, and the community stayed with them, and they grew quite well, right? So build that community, invite early adopters, MVP, make sure you keep it minimum and get something out in people's hands to start using. I was listening to LinkedIn today, and one of the guys, I forgot his name, but he's like, if a person's hair is on fire, right, and you're selling a brick, they'll buy that brick to put out the fire, right? I didn't like the example, but I would have rather, like, if you're selling scissors, right, they'll take that, right? They prefer to have water, but they'll either take a brick and clobber that, or you can take some scissors. Still, you don't have to have a perfect solution when you're early on, right? Get that momentum going, and it's going to pull you through the rest. And it's also going to pull on investors, right? A good onboarding process, clear monetization plans, know what you're going to do early on. Even there's nothing wrong with not monetizing your product for a little while and building that audience, right? Everybody knows it's going to get monetized in the future. But I do like monetizing early on, but don't think that you have to, right? That's sometimes it's better just to get that training card out there to start seeing if it's worth it in the first place, right? And then, if you can, take a little extra time in the very beginning and see if you can develop any blue ocean strategies, right? So what is it that you can,
Yeah.
what niche of this industry can you take and focus on that's going to really open it up for you and make it hard for competitors to come in and pull that away, make it hard for the existing market to come and pull it away. Sometimes you don't have to change a lot to create a little sub industry or whole industry that you can really control.
Well, that's right. That is some great advice. Philip, what are your thoughts about NFTs as a funding mechanism for app development projects?
Oh, they're so interesting. I think it depends on it depends on your product. There's a
Mm-hmm.
lot of industries where it really makes sense. If you're making a game, for example, right? How easy it is to say, I have three NFT products, right? They're only going to be these three. You'll have them for the lifetime of your accounts, and right, if you have a little bit of community, auction those off, raise a bunch of money. There's other ways to do NTFs that make sense, and you just have to be creative and target it towards your audience and your market to make sure that it's an attractive offer. It all comes back to the value proposition and creating. I don't know what I put it into gamification category. Yes
Mm-hmm.
and no, right? But if you can gamify it, even better. And I'm not talking about just games. You could have a flashlight app, right? And make some gamification in there and make it more attractive with an NTF offer that is that it separates and gives people prestige if they're involved in it. Also, NTFs represent prestige. They're original pieces of some kind of creativity that is unique. So that's the real value. There's other ways to do it in scale. It all depends on what you're trying to achieve.
All right, okay. So moving on to our next question that comes from audience. So the first question that we are having is how important is it to align your funding strategy with your overall business model?
There's two parts. One is you should plan it ahead and know what it is so you're not abusing the resources you have. The other is you
All
should be
right.
creative and flow with the needs and market environment, right? So
Mm-hmm.
in my discovery process, right? If you do a full discovery process with me, we outline this and we create our inflection points, and I have you plan out what you're going to have to spend and where, so you know what it is. You know when to bring in money and how much money is going to get to you to the next stage. And every
Oh,
stage you get to, you visualize the earlier you get money, the more of your pie you have to give away. The later you raise money, the smaller pie you give away, right? And now it gets different at large scale, right? So when you're bringing in millions of dollars, right, you're increasing the value of the company, and then you're looking at a combination of pre-seed money, post-seed money, right? This is kind of different. It's easier for us to consider the early stages in this discussion because it gets to the point of a lot of startups, right? Now,
all right.
and it's different, right? The way people look at the way a company looks at money is very different as a public company than it is as a startup.
All right. As we're talking about campaigns and funding, can you share some examples of successful app funding campaigns?
Mm. So there, um, I've seen both successful. So if you go on, a great place to look for great current day examples is Kickstarter, right? I have a lot of friends that write both books and apps, and they use Kickstarter to get going. And it
Mm-hmm.
becomes easier if there's two things that'll make this easier. One is, of course, if you're a serial entrepreneur, right? Once you got a
All
reputation behind you, yeah, you can really raise money quickly from the beginning. Now, if you're new to the game, create your personal branding, right? Create a
right.
2-month YouTube strategy that's going to get you a reputation out there and build that personal brand and answer all the questions that people will ask so that you can go in and build an audience that's interested in both in your product and investing, right?
All
They
right.
can go together.
Okay.
They don't have to be the same person, right? Because, in general, angel investors, they're either looking for returns or they're looking to, or both, right? But either looking for returns or looking to support and give back to the community, a community that helped make them successful, right? So if they became successful with restaurants, right, then they'll have a tender spot to that. And who knows, maybe it's not like the actual restaurants, maybe it's technology, maybe it's applications around restaurants, and you can look to these investors and they'll kind of like, okay, give back maybe, but when you combine the chance to make money and to give back, God bless you, right?
Yeah. Okay. So what are some common mistakes developers make when they're seeking funding?
Not knowing how much to ask for, giving away too much of their company, not having the plan ahead in a way that makes sense, not having conducted any product research to see if there's a product fit and to be able to show that. And also not thinking in terms of how an investor is going to make his money back and speaking to that story. Also not having created a real story in the first place. Why do you have this passion? Right? What got you here in the first place? Share that story. And I like to share it first from the perspective of the company. Like, what's the point of the company? And then I bring it in personal. I try to use some humor in there. I try to make it exciting, right? My first introductory story, 30 to 60 seconds, right? If somebody comes and say, hey, Phil, what do you do? Right? I want to be able to, in 30 seconds or 60 seconds, say, hey, this is what I do. And it's exciting, right? Would you like to know more, or would you like to get a beer? Right? And not that I, love beer, nothing wrong with it, but, bourbon's better, right? So I say, how about a bourbon or something, right? But that aside, have your story, practice and rehearse, and have it with energy and have it be interesting, right? And play it back. Did it sound fun? Did it sound upbeat? Listen to yourself. Listen to your look at the expression on your face. This is the other thing. Sometimes people sound confident, and when you look at their face, they're like crying, right?
Yeah.
Practice in the mirror, practice in the shower, and make sure you sold yourself on the product first. But get that story down. There's so many great ways to learn to build a good story. We should do a podcast on that.
That was remarkable. How do I determine the right amount of funding to seek for my app development? That comes from one of our audience members.
Okay, good question. It goes back to having your plan, your 2-year plan, and you can either think of it as like waterfall planning or whatever, right? I think of it as inflection points. To get me from A to B, I need to raise 5,000, right? So to get through my discovery process, I need to raise 5,000. To get through my design, I need another 5 or 10,000. To get through my UX development, where I'm just going to develop this prototype, I need 5,000. These numbers are just round, right? And each of these are inflection points, right? Now I want to have enough for that entire sprint plus 5 to 10, 20% into the next sprint, right? So if I'm bootstrapping, I don't want to start discovery until I have the whole 5,000, right? Preferably, I like to have 7,000 in there minimum, right? Maybe the whole money. My best thing is having all the money, right? But 5 to 7,000 to get through discovery, and then by the time I'm finished with discovery, hopefully I've raised the next whatever money I need, 5,000-10,000 for the design, right? And a little bit to get the developers going, to put a deposit for that development to get that going, right? And I know my first stage of development to do this, like I said, for first thing that comes to mind, who knows what it is, right? But most likely some kind of physical product. If I'm planning to raise money, the first likely is an app or a web app that shows the outline and people can see what it is. They can click through it. Yeah, it doesn't do anything yet, but you can see what it is, you can show it off. And if you have to raise money at that point, it's a lot easier than in the beginning stages, right? And the further along I can get, better. Get that server up, get the application working so that I can start bringing on users. Once I start bringing on users, make the functionality better. Go from that scissors to, getting your hair off fire to putting to water a nice, beautiful bucket of fresh mineral water, right? Work your way up there. Don't try to do it all at once, but just keep that inflection point, because any business is progressive. You don't get there all in one day, and you can change. You want to have the flexibility to change a lot of things as you go, and it's hard to do if you don't plan out the whole thing, or if you try to raise the whole 150,000 or 30 or whatever $1,000 in the very beginning. It's a lot better to do it incrementally and show that value. You get better rates and you get more involvement, and you reduce the risk as you go.
What are the key metrics investors look for in the mobile app before committing funds?
So it all starts with a plan. Every investor wants to see that you have a good plan and that you have a good business strategy, right? This is the very beginning. Now, the more product you have, the better your return is going to be. But if you don't have a lot of money, don't be greedy about trying to get out every little bit of money and making the product perfect. That's not going to get you more money in the long run. Right. And you're going to increase the chance of failure. So look at how you can reduce the risk as you go along and make it more attractive for the investor, and just ask for a little bit of money. Right. It shows maturity and ability when you ask for a little bit of money, give them a milestone, then come back and ask for more money. Now you can say, one thing you can do is say, hey, look, here's the entire path. Right, from A through my marketing, and I'm looking to raise all this money, and the total investment equity I like to give away is half of my company for this $1 million that I want to raise. In the beginning, I'm only asking for $5,000 to show you that I'm serious about this and to be able to build this whole plan. Here's what I have. Right? Would do you want to take this next step with me? Way better than saying, hey, I want $100 million, and in 2 years I'll come back with a project for you.
Yeah, that does make sense. How do different app platforms, iOS versus Android, affect monetization strategies?
It used to be really pretty clear that it was hard to monetize on Android. It still is, right? Currently, we're looking at 60% of the income comes from iOS and 40% from Android. From their purchases and subscriptions are fairly well split, consistently split. Now, there's some markets that respond better on Android than they do on iOS. And of course, there's demographics. So what you have to do is look into some statistics and see what's going in there, do surveys, go out there, observe it if you can. Because sometimes you'd be surprised, right? So a lot of businesses in America use Android heavily. So if you try to go iOS first and you don't have that Android components, then you're going to lose out on that. Now, expect the more technical the client is, the more likely in the US he's going to be an iOS user. In Europe, the rest of the world, there's a good chance that there's going to be higher end Android machines as they go up that value chain. And then there's, of course, a younger demographic that tends to go iOS, and an older demographic in some countries for Android. It all depends on what your target market is and who you're trying to serve. In America, I'm still leaning iOS.
Okay. And there's another question from our audience, that is, how can I maintain user engagement and profitability simultaneously?
There's no reason these would be separated out, right? As long as you are listening to your users, you're supplying the need in the marketplace, you'll do well. Now, you're going to get negative feedback. You're going to get trolls. This is natural. Expect it. Don't be upset when it happens. And know that more people are watching how you respond to negative feedback than how you respond to positive feedback. And having a good, quick response to crap that happens, and it always does happen, is bigger than having the apparently perfect system and trying to cover up negative feedback. Let it be out there, respond to it maturely and lovingly, and work on just making a better product as you go every day. and involve the community and let them tell you what's good, what's bad. And a lot of times try to harness that energy. So it, and it kind of goes back to, are you an advocate brand? Are you a utility? Are you serving a game? You know, your strategy is going to depend on the purpose of your app. And once you've looked at the business strategy, you're really going to understand how to communicate with that audience.
Absolutely, that is so right. And how can I use customer feedback in order to improve my pitch to investors that came from another user of our audience?
So the question is, how do we use feedback to improve our chance to work with investors?
Yeah, exactly. That's what it is.
Okay, document it. Right, best thing to do, have it documented. The biggest mistake that a lot of people make when they're doing surveys or interviews or just get general feedback is they don't keep it. They don't write what they did and evaluate it. So here's the first thing you do. You have a scoring card of how you rate feedback. What does good feedback look like? What's the mission of, what does a good client look like? How what's my value proposition first? And now when I have that, I can take this feedback. I can say, okay, this person's feedback is 30 points out of 100 because he's not really going to use the app in the first place. He was upset there wasn't a free version, and he actually didn't even answer the feedback. He just said, I'm a troll and you're blue. Right? So I'm not going to give him a lot of points. On the other hand, I have this other guy, and I'm going to give him 90 points because he is exactly my target market. He wrote out a great description of what the problem was, and his point was totally valid. Right? Okay. Yeah, and it's on track. It's valid because it's on track with the mission of the product. He wasn't asking for a flashlight app to sing a song. He was asking for a flashlight app to have perhaps an SOS or to have a brighter interface or to, you know, to have some kind of functionality that was directly in line with our mission. So how well does that correlate? Write that down and show this. And when investors see that you're looking at feedback in a meaningful way, it shows that you're a mature business and that you're looking at things from a data-driven approach. And they may not understand the metrics, but knowing that you have it, and if it does align with something that makes sense to them, beautiful.
Makes sense. Makes sense. That's such a terrific answer. What are the pros and cons of using ads as a monetization strategy? Another one came from our audience.
Nice. I'm a huge fan of ads and paid marketing, right? So ads are obviously paid marketing. They help multiply your organic reach many fold, right? So I like to start with creating a really good organic approach and doing micro investments into my marketing, say 10, 20, $100 per day, testing on these smaller ads to see what is being what's working for me. And I'm going to have metrics to say, okay, this, if I, based off the response on this, I will make or lose money on this ad. How much money will I make, and how viral does it look? Right. And when I'm looking at those metrics, I can say, okay, cool. This is when I want to spend $1,000, $10,000, $1 million a day or a week on. There's, most platforms limit how much you can spend at a time, but I can get this right. And then I'm monitoring that to see, is it still responding as I put in more money? And I may ratchet it up really quick, right, and cut it back fairly quick. But I like to do more gradual increments. I know some people that like to test it, like the way I do, like for 10, 20, or $100 a day. I know people that start at $1,000 a day because they want to get a larger chunk of inputs and verify and get that quick response. And they're sitting on, they're watching it. They're okay with that kind of budget to throw out there. It all depends on what your comfort zone as far as spend goes, but it comes back to, are you multiplying your organic reach, or are you force feeding the spoon? It's okay to do both, but the more you can multiply that organic reach, that's my favorite use of ads.
That's absolutely correct, Philip. We would love to have your more insightful thoughts and your suggestions that you would have for our audience. And it's a wrap for today's session. So, would you want to say anything to our audience?
No, guys, great questions. Thank you so much. This was a lot of fun. Thank you, dear. You're amazing, and much love to everybody.
Same here. Huge thanks to everybody who followed us and who were watching this session. So remember us. Remember to join the journey of success is filled with challenges, but with the right strategies and mindset, anything is possible. Until the next time, stay tuned. Take care of yourselves. Goodbye.
Bye, everybody.